Hello everybody, I'm David Brear, CEO here at 11FS, and in this special bonus episode, we're sharing an interview that I did with the lovely folks over at Wharton Fintech Podcast. It was a good chat. We talked all things fintech and financial services. I'm sure you'll enjoy the show, and they've been kind enough to let us share the whole thing on Fintech Insider. So if you like what you hear, do search for Wharton Fintech Podcast wherever you're listening to this and give them a follow. Enjoy.
Hi, David. Welcome to the Wharton Fintech Podcast. Where are you calling in from today?
I'm over in the UK, a very suddenly wintry vibed UK, I have to say. It's been a real shock to the system.
I guess that's how you know it's November. So the first topic we want to discuss today is commercial banking. 11FS recently released a report on how digital banking ecosystems are reshaping commercial banking. To start with, can you give us an overview of the unmet financial needs of commercial businesses?
Yeah, I mean, how long have you got? The SME space is, we talk about being underserved, overcharged or overwhelmed, and actually the SME space is probably the largest category of underserved people and slice of financial services globally. It's a funny one, having researched this a lot in various different geos, but equally having actually built one of these organizations. So I ran as the CEO of Metal, a challenger bank in the UK. We built for NatWest. That is a market that actually has been really struggling to get to grips with fundamentally serving the real problems. And the SME market is often treated like it is an offshoot of retail banking, giving people the access to an account or a checkbook or whatever, but actually nobody runs their business in that way. Nobody runs a business looking retrospectively at the transactions that you've actually made. And this is particularly a pain point for SMEs. Nobody starts a business to do small business banking. Like they start a business to sell cupcakes or whatever it is that they want to do as a business, right? So build banks, whatever, like what we do at 11FS. So actually the market is by nature robbing time from the people that they serve away from actually building their business. There's this whole balance between working in the business versus working on the business when you're starting a business for yourself. And actually the financial services of the business is the absolute last thing that anybody really wants to be spending time. If you look globally, why has fintech had an impact in the SME space? First and foremost, the problem that people face into, the job to be done is just getting a bank account for starters. Actually, when you look at the ease that it is to, in places like the UK, register a company with Companies House, do all of those pieces that you need to legally be a business, you can win work, you can get all those things going. It takes you longer to get a bank account than it does either of those things, which is crazy. So, first and foremost, the underserved job is gaining access to financial systems in that sense and to be really able to operate as an organization. It's why people like Tide in the UK have done an amazing job. I think they've got something near to 6 or 7% of the market now, which is amazing, just because they've got a 3-4 minute account opening process. Beyond that, the needs of SMEs are incredibly varied. The growth areas that businesses go through, from having no employees to having an employee or having an accountant or a financial director. All of these things break traditional banking in terms of we've been conditioned to not allow anybody to have access, username, password, access to the bank account. But try running a business and giving your FD access to your bank. It's 14 forms and 4 weeks in a branch. It's incredibly complex to do these things and do these things in a level of control. So we really think this is the number one underserved market, because actually the complexities of running a business and actually the distraction of financial services to running that business is really significant.
Do you think banks are ready to embrace digital innovation to meet these needs? And if not, what's standing in their way?
I think the challenge to that is it sort of flies in the face of traditional financial services, really. When we talk about all of these things, giving your FD access, well, that's not a product, that's a service, right? Or actually, look, when you get to 30 people and you want people to be able to spend and do expenses, well, actually giving them access to spends, that's not traditional banking, because if I give my FD my password, well, what stops them transferring all the money away? I know you have rigorous interview processes, but things happen, right? So I think the challenge is that all of these things that we're talking about that are essentially things that enhance the ability for businesses to run their business more effectively actually are services, they're not products. So to your point around a big organizations ready to face into this battle, I think actually what they need to admit, I'm a big believer, any first step of any program is always admitting there's a problem. I think actually the first step is the organization recognizing that actually they are a financial services provider, not a financial product provider. And actually, when you get beyond just thinking, well, I'm a lender and I do credit cards and I've got current accounts, to actually we orchestrate financial services to help our businesses be more successful, then I think they can get to a point where they can understand, well, actually, how do you provide these? Because most people business run off a weird spreadsheet or a mental hack or a 2 hours on a Sunday where you sit down with all your receipts. If banks can help people run their businesses more effectively, ultimately we're serving, the biggest population of SMEs, the single trader, the, 2 to 3 employees. Actually, that in most geos makes up 95% of the SME market in any particular geography, which is huge. So we're talking about fundamental shifts here in GDP. This isn't just wouldn't it be nice if they had better services? It's like this is critical to any industry, any international setup to allow businesses to be successful. So are they ready for that? I'm not sure they are, but definitely they're searching for it. I mean, if you kind of look at any market, people really only respond to the problem when there's a threat to it. And actually, when we've seen people like Xero, people like accounting, various different accounting packages, we're seeing financial services, fintech players start to aim at slices of these opportunities. I think actually now the water is being turned up. It's getting warmer in each of these markets. There's more competitive pressures. It feels like the time is now to really respond.
Absolutely. And when you think about the core digital technologies that banks are using, where do you see as the biggest gaps between what they are using and what they should be using?
I'd say people kind of think about this one a little bit the wrong way around. The stuff you do for your customers is really important. And I know this it flies slightly in the face of common wisdom, which is, the customer comes first. I really don't think it is the case when you're thinking about building a service. I actually think your employees come first, because essentially your employees are creating the capabilities for your customers, right? So if you're basically holding, I was going to be kind and say one arm behind their back, but if you're holding both arms behind the back of your employees, inhibiting them being able to move fast and make things happen, then by nature of that, your customer service, your customer capabilities are always going to suffer. I often say, it's not what you do, it's the way that you do it that is critical in these markets. And actually, if you look at players like Tide or Monzo or Revolut, it's not really that they've got some, amazing strategists who have come up with things that have never been done before and, oh my God, aren't they innovative? Actually, the reality is that they're just brilliant at going from a good idea to putting it into the hands of customers really, really quickly. Now, that's part operational capability and that's part technology, infrastructure, and the things that they've put in place. So they've got, event-driven architecture with microservices and da-da-da-da-da. But really, the other part of that is that just culturally, they're set up to do small things quickly, test and learn with their customers, fundamentally understand what works and what doesn't work, and evolve. And I think this actually is almost the dichotomy that we've got now between really, really big organizations, waterfall business models, annual budgeting processes, project thinking, and small agile players who are able to deliver capabilities into the market quicker than actually the big incumbents can schedule the meeting to talk about it. So, and I think that's where really we're going to see the separation of organizations at this point. I've been saying this for a couple of years now, but actually, Starling and Monzo started and built capability that makes them look like a traditional bank, but actually, it sort of starts slowly, that change, and it seems like it's very gradual, but then all of a sudden there's dramatic changes happening in the market. This is why they can be investing in, insurance and investments and pensions all at the same time, because they've spent the time to build the foundations of a modern day digital business.
And one of the other ways in your report that you mentioned that digital businesses serve customers' needs better was through sort of partnering with each other. What are some of the most interesting examples you've seen of businesses partnering with each other to provide a stronger solution?
Yeah, it's a strange kind of point of emotional intelligence to go, hey, we're brilliant at this thing, and actually we're going to rely on other people to be great at this thing, So, Xero, again, are also a very good example of this from my mindset, which is, what's to stop those guys building a bank? Like almost nothing, right? But actually, what would be the benefit to them if they could just orchestrate all of these things together? So the marketplace that they have and their ability to pull in payments providers or service providers, lending products, credit card products, different things, to be able to distribute them to their bases. For me, that's a really great example, using Stripe, using TransferWise, using these players to solve real problems for customers. And actually the ability then to understand what works and focus on the problem at hand for customers rather than necessarily just your revenue line, your business model that you've got there yourself. There's many other examples where organizations, particularly where we're talking about, more B2B businesses, more, API driven organizations. Wise and Stripe are always the standout there. They are very focused about the monoline capability that they want to solve. And actually, having spoken to people like Patrick Collinson, they're very focused as an organization from a cultural perspective as well, is they really know they only want to really solve customers' problems and earn the right to solve more. And actually, when you look at the size of the business that they've got to, it's clearly not a bad business strategy.
Yeah, absolutely. And in your report, you also talk about new commercial business model archetypes, from well-known archetypes like BaaS and embedded finance to archetypes that some listeners may be less familiar with, for example, service orchestrator. Which of these archetypes are you the most excited about?
Yeah, I'm just happy we're not just talking about net interest margin and the sort of traditional models of financial services, because actually in that world where essentially integration and orchestration of providers to solve problems for people, this is a model that is new to financial services, but every other industry operates in a very similar way. And actually, if you look at the mobile phone handset manufacturing, what chips are in there? The lens is being produced by who? Does it matter? Actually, the orchestration, the pulling of those things together, the services and the software that runs on those things, that's the bit that we buy into as an end consumer and an operator of those things in that way. So whether it's, BaaS, and we've got, various different players of various different sizes starting to offer, core infrastructure. And when I say core, I don't just mean core banking. All the way through to the customer interface in terms of what's there. That is a huge step forward. I think it does kind of call into question, what is the place of big FIs in that space? Because, really, what is the strategic advantage of being big in this market? Yes, from a balance sheet perspective, it's a good thing, but actually, for all of the things that we've just said, make small players really successful. And, it's the Clayton Christensen's sort of innovator's dilemma, right? Will the startups get to scale before the incumbents learn how to innovate? I think what we're saying here is that the innovation that we really need to see in those big incumbents is their ability to actually deliver. And delivering in a digital world is a very different thing than just delivering your P&L responsibility and your annual report of your financial performance to your investors every year. So I think actually it's an interesting sort of point in this market, which is what is the strategic advantage of being a fully regulated licensed bank in 2023 and beyond?
And in choosing partners, do companies generally have a preference for finding many partners that each do one thing really well, as opposed to finding one partner that meets all of their needs?
Yes and no. It really sort of depends on the size of the player that we're talking about. The sort of difference between bank as a service, that is a underlying technological capability, and more broad sort of bank as a box. Hey, it just does everything, and therefore, I can outsource responsibility for some of these things. It sort of depends on the size of the player that's making the decision, and also maybe even the technological sophistication of that organization in terms of the responsibilities that they really want to bring on board. In many instances, what we're seeing is, again, quite a bifurcation of the market. Actually, if they have a good level of technical understanding, it's actually more like the equivalent of people who like to build kit cars. Actually, they're really into picking what the engine and the gearbox and the suspension and all of these things are doing. But actually, they know that putting those things together themselves is a bit of a labor of love in terms of making that happen. Whereas on the other side, actually, whether it's smaller FIs, building societies, etc., actually, we're seeing people wanting to buy those things lock stock to make those things happen. When it comes down to like SMEs themselves, again, we're weird. We're having this conversation now. We fixate on fintech stuff and financial services stuff. Steve, who starts the hairdresser down the road, like, he doesn't care if it's, Tide or Wise or Stripe, or none of these things make any sense to him in any way, shape or form. What he cares about is being able to run his business most effectively. And actually, I think the organizations that actually either make them, better off, as in make them financially better off, or give them back time, are the ones that can really establish themselves from a hierarchical perspective. I'd say for SMEs, the idea of universal banking, I think, is a dead thing. We should just call it, and the time of death is now, because essentially the idea that you just go to whatever high street bank is, and then you take whatever lending product they can give you, and you take whatever credit card they can give you, and and that is it. People are more open to being more savvy now and shopping around for those things to make sure they're actually getting the outcomes that they really want to.
Switching to our next topic. So one area that you're passionate about is what you've called the banking battlefield. Firstly, can you talk us through this landscape? Like, what are the two main drivers in the market that are shaping the players' futures?
The idea for us is that, similar to what I was saying earlier on around the innovator's dilemma, the Clayton Christensen's, will the big incumbent organizations learn what innovation really is, and not in its, shiny lab and, making the board feel comfortable, but in the truest sense of making change happen in the organization? Will that happen quicker than the disruptors in the market will actually get to a level of scale that truly disrupts them in terms of the control of customers, or fundamentally their P&Ls, I guess. And actually for us, what we've seen from 2010 to now is like quite a significant change in really, what the objective actually is, where are big financial services organizations going, but also because of the level of disruption that we've seen globally in the regulatory landscape, the level of expectation from customers, and actually fundamentally the competitive landscape there as well, then all of those things are leading to a much more complex, a much more chaotic landscape. And this is what we talk about when we talk about the banking battlefield. Because ultimately, it is a battlefield, whether there are many organizations that don't really look outside of their own four walls, but out there, the competition is getting hectic. If you kind of look at the UK market, that was kind of the point, right? The competition mandate for the regulator was there to spur real competition in the market, allowing new players to come in, allowing them to gain regulatory access, which turns up the heat, because the theory really is that if there's any market that has great competition in it, well, actually competing for customer leads to a better outcome for customers as a whole. And so have we seen, right? So, I'd say back in the day, the only axes that really mattered was the amount of customers that you could acquire. And when there was, a blue one versus a red one versus another red one, and nobody was really doing anything in the market, then actually nobody really had to compete very hard for those things. The advent of digital, and actually that, introduction of another axis has fundamentally shifted. That's the old, ice hockey thing of skate where the puck is going rather than where it is, right? The puck is, and the puck being the industry, is very much hurtling towards digital. And it's funny, there'll be people who listen to this is like, well, my bank's done digital. We've got an app and a website and stuff. It's like, that's not digital. Digital is all the things that we talked about when we're talking about operating model, the unit economics that go around that, your ability to deliver digitally, deliver things to your customer. That is digital for me. So this balancing act then of, well, big incumbents with most of the customers in any market and these fintechs with, not many of the customers in any market at the beginning, that has grown and shaped and changed in such an amazing way. We've seen Nubank acquire, 60 million customers in Brazil? That's crazy, right? We've seen Revolut go from this tiny little thing in the UK to everywhere I go. People seem to have Revolut cards. We've got some of the biggest fintechs acquiring other gigantic, so, and beyond that, we've seen, Google and Apple and Facebook and, Alipay and all of these things acquire and land into the banking battlefield, albeit maybe not fully regulated, maybe not. So the challenge really is that where you sit on that banking battlefield, whether you're a big incumbent bank or a small bank or a big tech player or a non-bank like Shopify wanting to kind of disrupt the market and distribute financial services, or whether you're a fintech who has the aspiration to take over the world, your strategy is very different depending on where you are and where you start from. The beautiful thing about it, and we use this as a proxy for explaining it, is sometimes you've got to kind of take the needle off the record. What we're seeing is different players start from different positions. A lot of the big incumbent banks now are taking a strategy to build their own disruptor, because going back to my point earlier on, it isn't about actually, well, how can I overcome 50 years of legacy technology and culture and thinking? Well, actually, the way to do it might not be to do it. The way to do it might be to fundamentally start from a different place. I often sort of tell the joke. I live in Norwich in Norfolk, so everybody sounds like drunk pirates around here to me in terms of the accent. But actually, there's a joke that says if you pull over in Swaffham and ask the nice guy on a bike the direction to Bacton, well, what he'll say to you is, well, I wouldn't start from here if I was trying to get there. And what we've seen with many of the big FI players, look at Chase in the UK. Chase, to us is a little challenger bank. Actually, if you're in the US right now listening to this, Chase is 60 million customers, right? If you look at Mox with Standard Chartered in Hong Kong, Standard Chartered is a gigantic global bank. Mox is a little challenger bank in Hong Kong. So, but why are businesses doing that? Actually, what they're doing is they're building new things in new ways to deliver new outcomes. They're building new cultures and new technology stacks in order to be able to repeatedly get things through to their customers in cost-effective ways that actually the big incumbent organization can't do. So if you can marry innovation and scale, you're going to win in any market. And really, this is what the big incumbent organizations are doing to try and counteract the effects that fintechs have by taking slices of customer base and increasingly taking slices of profitability as well.
To what extent have these big banks been able to get to digital and not just digitize? Is it just a handful of them that have, been building their own disruptor that have been able to achieve this, or what are we seeing?
Yeah, so I think, again, there's not many weeks that go by where I don't talk to somebody senior at our bank and go, yeah, you get it. They're not crazy. They're not sort of fingers in their ears and hoping it all goes away. But actually what we're talking about is hard. Me and you could start a business tomorrow and talk about it and agree it and be like, cool, your strategy, I'm finance and HR, whatever, and we get it and we can agree it really quickly. Trying to do that with 300,000 people in your organization and cultural transformation and moving technological revolution and, moving all of these things forward, it's difficult, right? So I think we're kind of we're in a weird place. I think the big banks are really trying to make these changes happen. I think in many instances, they're in the middle. There's light at either end of the tunnel. And actually, for some of them, it's getting scary and they're going to go back to where they were. But for others, they're doubling down and really pushing for the other side of that mountain. So I think we're really going to start to see some big organizations. Again, look at Chase. Chase is not just about having a little bank in England for JP Morgan. This is fundamental to their strategy in order to know about how to run an organization in 2023, right? They get finance, they get banking, they get balance sheets, and that's great. Now, if you can couple that with understanding how to run a tech business, game's over really in terms of competing with that, right? But equally, we're now at a point where, back to the point earlier on, I mean, Monzo's doing investments and pensions and they've just announced insurance and wow, it feels like all of these things are changing the speed in which the industry is moving. Again, it used to be a 3-year investment cycle and, we digitized these things and we took out people, we took out paper, we got rid of premises and, shut down branches. But actually, it kind of feels like the metronome of the industry is ticking at a completely different tone now than it ever has done before. And all of that is because people are increasingly understanding what I said earlier on, which is it's not what you do, it's the way that you do it.
And when you think about the large neobanks and fintechs that are around today, do you consider them to be sort of truly digital companies that are building with today's technology, or more kind of starting from a place of offering a digitized solution?
I think there are definitely organizations that are better banking, and actually, I mean, if you look at Starling is a great example of the things that they built actually are evolutionary steps on the direction of the strategy in which Anne and the team, set out right at the beginning. There's always these things that you've got to take with you. There's always customers, right? You've got to take customers along these evolutionary steps to get to these different places. I mean, if you look at the first cars looked like horses and carts just with an engine in it because they didn't want to freak people out in the street because they were like, oh my God, where's the horse? So, you've got to take customers along in this course of direction because first you've got to solve for them better the needs that they already have in order to then surface the needs that they don't even know that they've got, right? And it goes back to the conversation with SMEs as well. I mean, actually the best packages for accountancy, let's say me and you are married. It went well. We've gone from being business partners to being partners now. But let's say that we're married. Actually, what we want is somebody to run our finances for us, right? So if you had 5 great people running our financial services lives for us, well, they would be making sure that our long-term needs are thought about, that our short-term goals are being planned for, that actually we're saving enough money from our salaries each month to do those things, and that we're enjoying life because we're getting that holiday. So all of those things that are eminently very solvable problems, actually nobody is really supporting people with. I think the next generation, what we're going to see in financial services is that service element. It is using the real-time, intelligent, contextual, services to solve real problems. Because whether it's an SME, whether it's a ultra high net worth person with millions and millions of pounds in the bank, or whether it's somebody just getting into financial services for the first time because they've just turned 16 or whatever, nobody really knows what good looks like. And using the power of that data, using the power of automation to make these things happen for people, I feel like that's where the next generation will come. And who's best placed to do that are the people who can move fast and make things happen and have very low unit economic costs with regards to their infrastructure and their technology. Kind of my money's on that side. But at the same time, you can never rule out people with crazy amounts of customer numbers and crazy amounts of investment to make, right? And this really is this is the banking battlefield that's shaping out. This is the war now. It's not just about customers anymore. It's about capabilities.
And tech players like Apple and Google have made strides in recent years in the financial services space. Do you see a world where they are holding the primary banking relationship?
You see what Elon Musk came out with recently and said, look, X is going to be a platform to not just facilitate payments, but mean you don't need a bank, and I'm like, okay, what do you mean by, and he's got a good track record, right, with PayPal and stuff that he's done before. I think it's an interesting challenge, really, because when we sort of say about scale, if I say HSBC in most of parts of the world, people will recognize the brand, right? Similar for Bank of America in most of the world, or say Lloyds Banking Group to anybody in the UK, and they'll recognize that brand, right? But equally, actually, customers are quite naive when it comes to brand recognition. Look at us all. I mean, most of people in the UK buy insurance based on the fact that they get a free Meerkat toy, you know what I mean? So actually the ability to get brand recognition is only down to your ability to spend above the line on a marketing campaign. Who do people trust? I think customers trust big incumbent organizations not to disappear with all their money, but they don't trust them to do the right thing for them. Do people trust Apple? Maybe. Like, actually, I mean, if they're willing to pay 1,500 quid for a new iPhone every 18 months, then maybe they trust them more than they do their banks. But I think what Apple brings, though, is they solve problems. You know, they are solving problems for customers. They've created desirability around the things that they do. And big incumbent banks are not good at doing that. Fintechs, on the other hand, I mean, if you look at the latest capability that, Monzo released for their investments, they had, I think it was like 150,000 people in a queue. This is a financial service product, and there was people like in a queue for it. I mean, they've created a brand that I think has a different level of trust, and therefore actually, well, if they do it, then it's good for me, I think is the kind of mentality. So I feel like the challenge will be, do people trust Apple more than they trust HSBC? Maybe. Are Apple better at building software, therefore services that will solve problems for them than HSBC? Yes. Categorically, yes. So is it likely that financial services increasingly becomes embedded more and more into operating systems? Yes. And therefore, really, do Google and Apple and Samsung have a very large part to play in financial services going forward? I mean, well, we're carrying around, supercomputers in our pocket. Absolutely.
The third topic that we wanted to cover today relates to the work that 11FS has done with organizations across the globe. We'd love to get your insights on how these financial ecosystems differ across regions. So to start with, firstly, thinking about the tech, does the approach to tech change from region to region?
Yeah, sure. Bizarrely, I'd say actually the technology is very consistent. And actually, I mean, there are a few caveats to that, really, from a regional perspective, which is, if you look at kind of like the revolution, really, that's happened from a fintech perspective, and therefore the competition that's been created, that's predominantly been the seed, the first domino in any market has always been the regulator. It's why, the FCA, the PRA, HKMA over in Hong Kong, MAS in Singapore, the changes in those organizations in order to create the right environment for a fintech to flourish, and actually the tension to existing incumbent players to have to step their game up. That has been kind of first and foremost. And with that comes then actually openness to technology. When we sort of talk about technology in financial services, we're not talking about, well, hey, like, what's your policy for digital assets? We're like, no, do you let cloud adoption happen? And these things are so fundamental to change in that space, because, no fintech in the world has ever decided first and foremost where their 3 data centers are going to be, right? So, you actually are using, you're using AWS or GCP by default, right? So I think what they're trying to do by regulation fundamentally shifting in each of those geos is create a playing field and a level of cultural transformation within those regulators to allow technology to flourish, to allow startups to flourish in that way as well. But when it comes to the place that big banks have got themselves to when it comes to legacy technology, or the scale of the problem when it comes to facing into 50 different monolithic structures to run, like all of the pain everybody knows and loves deeply, I'm sure, that's really consistent. Actually, how you could address it, though, is very geographically specific. The thing that's probably usually more dramatically different is actually the customers. And it's so stupid to say that out loud. I mean, we've been so lucky to do, jobs to be done frameworks, which jobs to be done, for anybody who doesn't know, is a great methodology for getting to grips with actually like the real brutal realities of day-to-day lives for people. It's not about going, hey, we've designed a new thing. Do you like the blue one or do you like the red one? It's like, that's not customer research, right? Actually, what you find in any geo is that financial products are very similar. So the underlying financial instruments of savings accounts and credit cards and current accounts and all of these things are very, very similar. And actually the context of, mortgage rates are going up everywhere and, interest rates are suddenly a thing and there's this cost of living challenge everywhere and utility prices are going, that's sort of relatively consistent across the world. That's sort of happening everywhere. But actually what you kind of find in the middle there is market context, market conditions create people using those things in different ways. And that's, in some instances, geographical thing. In some instances, it's a generational thing as well. And actually where different people in different locations get their education from, are you more influenced from a societal perspective from your friends or, TV, or are you more impacted by generations of family? And actually it's been really fascinating to see the differences there. If you look at Hong Kong, Hong Kongers pride themselves on being savvy when making financial decisions. Being moxie is why Mox is called Mox, because essentially being savvy with financial decisions is a whole thing. So there's a real pride in staying ahead of that game and knowing which credit card to use in order to get the benefits of these things and that thing and whereas actually in other geos, the UK market is, we've been brought up with this stiff upper lip and told never to talk about your finances with other people. Do you know what I mean? So actually understanding those things and asking, there's cultural differences that actually come to the front with regards to how financial services actually manifests itself as well. And it's been, like I say, whether it's sub-Saharan Africa or Nebraska, it's been amazing to see how people really interact with financial services.
We spoke before about how in the banking battlefield, there's this axis, which is the sophistication of digital services. When you think about the financial ecosystems across regions, is there anything you'd call out about where the financial institutions and fintechs generally sit on this axis?
Similarly to the generational point, I'd say that fintechs are sort of being born into a world where actually you are sophisticated with your technology by design. It's a similar thing that we're sort of seeing in the car manufacturing industry. Tesla has come in and built an electric car from literally the tires up. The systems that it has are so integrated that essentially anything can control anything, right? So, you can sit in the car and your weight sensor on your seat is determining the power in which your airbags go off, that level of sophistication, or even your ability to control the temperature from your phone, Whereas actually, if you're taking a combustion engine car and electrifying it, you're taking the engine out and figuring out how to put a thing in. Those systems are never as integrated as you would do if you're designing them and building them from first principles. So, fintechs are being born into a digital age. They're digital from their DNA up, their technology, their culture, their operations, and everything that really goes with it is about making things happen rather than stopping them from taking place. And going back to that, it's not what you do, it's the way that you do it. Many organizations look at, a features arms race. The big banks look at the fintechs and try and put in place a program for the next 2 years of work to catch up with card freezing and, blah, 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 blah. But actually, by the time they get there, the puck is somewhere completely different in the future. I think the battle that is going on is an incredibly complex one when it comes to, the traits of the people that ultimately will be the winners in there. Like we say, customers, investment potential, brand recognition, all of these things are critical to being successful in the financial landscape that we're facing into. And I really think it's way too close to call the winner. I do think there will be different winners in different regions. As you say, the big part of that is the regulatory change and actually government intervention there as well. I'd look to something like the US market as maybe a bad example of this, if I'm honest with you, which is, actually allowing big incumbent organizations to create structure around things like open banking rather than open banking being centrally managed as a thing, well, it's always going to skew it towards the incumbent existing players rather than creating an environment that actually allows, the ecosystem to flourish in that way. Not allowing new banking licenses in for such a long period of time in places like Canada, I really think that's a bad idea, because essentially you're just cementing the existing incumbents' place in the system, and therefore actually it doesn't really create competition for customers. I do think the challenge for any of these regions and the challenge for any of these big organizations where competition really comes in, if you look at other industries where competition happens amongst few players, it's a race to the bottom when it comes to a commodity. And nobody wants to be a commodity in a market that actually is increasingly trying to differentiate on service. It's a very painful place to be. Look at Vodafone and EE and these guys. It's not a high margin industry to play in when essentially everybody's cutting costs in order to compete. It's a fascinating market. It increasingly is a fascinating market, and I think we're very lucky to be working in it today rather than 100 years ago when actually all they'd be talking about is checks.
Yes, definitely more interesting now. When we look at the regional footprint of fintechs, like there have been a large number of fintechs that have been successful in expanding globally, particularly in sectors where it makes sense to be a global player, such as in payments. However, like many major fintechs have remained country or region specific. I think particularly true for some of the US-based fintechs in sectors like banking and wealth management, where, tech and regulatory requirements are a bit more country specific. How do you see this playing out in the future?
Yeah, it's a challenge, isn't it? Even in the US, you're not talking about country, you're talking about state, right? The level of overhead that comes with adhering to regulation is really significant. And actually there's a reason why, Wells Fargo has something like 15,000 people just looking at the regulatory approach to what they're doing state and state. And actually, I do think this is something, though, that is changing. All of the advancements around regulation and what regulating in a digital world means is shifting that. But there's no doubt it's a barrier to entry for people to go internationally. I think the opportunities, though, if organizations have good momentum, look at Nubank. Nubank has absolutely torn up trees in Brazil, and now because of that, they can justify and garner investment to go across other geographies. And we're not talking about small geographies, but geographies with fundamentally different regulatory approaches, different regulators, and therefore needing different expertise to make that happen. I don't think regulation is the barrier to entry that it used to be, just because of the approach to regulators making it more attractive to go to those markets. So if you look at anywhere that's got a gigantic population, the US, China, India, Pakistan, Southeast Asia, Africa, we're not talking about, in any of those places, we're not really talking about single regulators, we're talking about multiple regulators across the piece. But these things get overcome with smart people and money. And, there's plenty of investors out there looking for the next big thing to take over a territory. I do think there is more global commonality when it comes to the way in which regulators are regulating as well. There's far more bodies being set up to, emulate what's happened in some of the more innovative geos more globally. And that can only be a good thing in terms of the sort of import-export of financial services. We're all increasingly living a more of a global life, aren't we? So, being in a situation where our financial services can live a little bit more like we do, that's probably not a bad thing.
Absolutely. That was all the questions I had for today. So thank you so much for joining us on the show.
No worries at all. It's always a pleasure to come and chat. Happy to come back whenever. So I hope you enjoyed our little midweek bonus episode. If you want to connect, you can find me, as always, over on LinkedIn. Just search for David Brear. And you can follow Wharton Fintech Podcast wherever you're listening to this as well. Do give Fintech Insider a follow too. If you don't already, leave us a review. It helps us improve the show and helps other people find us as well. As always, if you want to join the conversation, find us on social media. Just search 11FS or Fintech Insider or email us on podcasts@11fs.com. Thank you very much for listening. Goodbye.